take a look at my Freetrade portfolio holding of stocks. Freetrade, by its name, is a free trading app. You can pay for extra features, but I'm using it as a no pay app. The first stock I hold is Airbnb. These are listed on the app in the value of holding. As you can see, the total value of my holding is £3,468.40, and I'm down £63.39 since I began investing. Getting back to Airbnb, I think most people know who Airbnb are as a company. I've stayed at several Airbnb premises and it has worked out quite a reasonably enjoyable experience in most cases, and it does give you access to all parts of an area where hotels may be not so popular. The value of my holding is up 28.54%, doing quite well. If I tap on Airbnb, this will give you an outline of the performance of the stock over various periods of time: 1 day, 7 days, 1 month, 3 months, 6, 1 year, and maximum. So from this graph you can see the actual value of Airbnb stock isn't at its highest. Regarding my investment, here it shows the current value, the number of shares I hold, the investment gain, and recent activity. This is when I bought the stock back in May 2022, and we're now on the 17th of September 2023. They give you a bit of information on this app about this particular company or stock. The price to book ratio is 16.43. The market capitalization is 92.4 billion, and it doesn't pay a dividend. And as I said, I could get enhanced stock fundamentals if I was willing to pay a monthly fee, but at the moment I do my own research and I'm quite okay. The next stock I hold is Omerous. I'm down 23.71%. I own 151 shares, and as you can see here, you currently have a holding in this instrument that you can sell at any time. To buy more, please upgrade to a paid plan. So what Freetrade are doing, when they initially set up, all their plans were free of charge, but now they're looking to monetize their system or make more money, and consequently they are withdrawing some shares that you can own on the free app. But as it says here, I can carry on owning them, I can sell them, but I can't add unless I go to a paid part of the app, which I'm not doing at the moment. The current value is £379.20. That's the value of my holding. Number of shares just over 151. Recent activity: I bought these shares in April 2022, and it gives a bit of information as previous about the stock. The price to book ratio is 2.28. It doesn't pay a dividend. So we go back to my portfolio. The next one is Old Republic. This is doing quite well, up 23%. And likewise on this stock, this is only going to be available for future purchases if I use a paid part of the app, which, as I said, I'm not doing at the moment. I'm up 23%, and it has paid some dividends, as you can see here. Dividend paid on the 15th of June, £1.81, March £1.92, December £1.78, and it pays a 3.57% dividend. So that's Old Republic. Next one is Aviva. 59 shares I hold. I'm down 19%. We scroll down. This gives recent activity. A dividend payment of £12 in May 2023. September 2022, a dividend of £6. I bought some shares for £63 on the 23rd of May. I bought then 15 shares, which I must have added to my holding because my total holding is 59 shares. Moving on to Allianz. This is an insurance company, as Aviva is. I'm up 6% on that one. Global Ship Lease. I've done a fair bit of research on this company and I invested because they had a good potential predicted upside in the value of their stock, and also they paid good dividends. So if we click on there, as you can see, this is going to be excluded from the free app, but I can hold what I've got but can't add to them. Current value, number of shares I own is just under 13. Recent activity, there's some quite healthy dividends here. 4th of September 2023, which is just received. As I said, this is the 17th of September. We received £3.86. In June, £3.88. In March, £4.08. So nice regular dividend payments every 3 months. The dividend yield is 8.43. And so that's Global Ship Lease. They actually purchase ships and lease them to shipping lines. The next one is Starbucks. I'm a great fan of Starbucks. I can see why they make money, because their coffee's good. They have drive-throughs and they have coffee lounges in all large cities and towns. Somewhere to go, have a coffee, sit down. You can also get food there now. And my holding is £170, and I have just under or just over 2 shares. And we click on Starbucks. Over a 1 month period, this shows how the price has moved. 1 year period, and this gives information on my investment. Recent activity, the last dividend paid to me was in August, 78p, then in May 80p, then in February 81p. So it's about every 3 months I've been getting a dividend from Starbucks. As I say, I live in the UK. I recently went on holiday to New Zealand, and there's even a Starbucks in New Zealand. Well, maybe several Starbucks in New Zealand, but I did go into a Starbucks. Next, Phoenix Group. This is an insurance company. Value of my holdings 161, down 18%. Legal and General, another insurance company, down 19%. I think listening to the news, insurance companies are having a bit of a bad time with lots of claim payouts, so they might be feeling a bit of a pinch. Greatland Gold, or Great Lane Gold, 112.50, down 58%. This is what you call a penny stock. I own several shares in this company, 1,424. I bought those on the 12th of October. I bought some more on the 6th of September, then some in March. And it tells you a bit here about the company. This is a gold mining firm. Greatland operates in Tasmania and Western Australia and has been in operation since 2005. So there's a gold mining company, but that is in a safe country which is politically stable, so we've got no problems there, hopefully. The Vanguard FTSE All World Dividend. This is an exchange traded fund where the fund owns shares in companies that have a high rate of dividend payout, and that's all combined, and I get a proportion of the performance of this ETF in the form of dividends and increase or reduction in value of the stock holding. I had a dividend payout in June of £1.20, and I bought this stock in May for £95. Dividend yield is 5.11%, but it gives you good exposure to the world dividend paying companies. Next, Imperial Brands. I would class this as a sin stock. This is a tobacco company. I think tobacco companies will become things of the past. They are trying to diversify into other methods of smoking or consuming nicotine, such as chewing and vapes. The value of the stock is down just under 5% since I bought them. And if we take a look, I bought this for dividend payouts. These are quite good, as you can see. 3rd of June, £1.07. March 2.46, December 2.46. So nice healthy dividend payouts. But as you say, it's a sin stock, and is it morally right to own shares in a company? I don't know. Moving on, JPM EMS government bond. We'll click on that and we go to this real estate investment trust. REIT specialises in primary care buildings in the UK. Their biggest tenant is the NHS property income distribution paid by UK REITs and subject to 20% withholding tax. So this is a company that invests in properties that they let out or lease or rent out to the NHS. And we've had some dividends, as you can see, 67p, 67p and 21p. Moving on, PHP Primary Health, down 37%. And we can see we've had some dividend payouts, and this is a real estate investment trust specialised in primary care buildings in the UK, the same as the previous one. I mistold this one. JPM EM government bonds. This one is, they pay a dividend. You can see the dividends I've received. And iShares JP Morgan USD Emerging Market Bond ETF. This exchange traded fund tracks an index of dollar, priced fixed income securities, so it's a nice regular cash payout, but the value of that stock is down at the moment. Primary health we have looked at. I looked at it twice, sorry about the mistake there. The Vanguard FTSE 250, I own 2 shares in this. I'm down 13%. This is another ETF. It tracks the performance of an index, a widely recognised benchmark of mid-cap size companies of the United Kingdom. So this follows the performance of medium-sized UK-based companies, and the value of their stock and the dividends is reflected in how these companies perform. Standard Chartered, that's a bank, up 17%. That has been down, but obviously it's up now. And I've had some nice dividend payouts, as you can see. Dividend yield is 2%, and it says here Standard Chartered PLC, specialising in international banking. They serve businesses and individuals. They offer banking solutions and investment opportunities. Then we've got British Land. We're down on that one. We've had a few dividend payouts, last one being July, and this is a large real estate investment trust, investing commercial and residential properties, sites including the Cheese Grater building in London. Property income distribution paid by UK REITs, that tells you about them. So that is a large company that invests in UK property. Tritag Big Box, down 1%. They invest in large warehouses, and the likes of Amazon rent these from them or lease them. Amazon, we all know who Amazon is, down 8%. Derwent London, this is another property company. HSBC, that's a bank. S&P 500, I'm up 42%, so I bought these at the right time. As you say, I've got quite low value holdings in these different companies, but when I do a bit of research on a company, I like to have skin in the game and it keep me interested, so I do invest. Admittedly, my holding may be a bit too large, so I can't keep track of everything, but when I do a video on a company, I generally do make an investment in the company to prove to you that everything I do is with my own money, and I learn by doing. I hope this is what you should be doing, but do carry on watching my videos. Then we've got SSE. I own 2 shares and had some nice dividend payouts. As you can see, they pay out a 5.8% dividend, and this is a utility company, produces, distributes and supplies electricity and gas. Going back to the main portfolio, Marks and Spencer's, up 19%. I went in their cafe a couple of times and I must confess I do like their trousers. The quality is far better than you can buy anywhere else, and it's taken me a long time to realise I shouldn't be comfortable than fashionable. But having said that, the trousers are quite fashionable anyway. But that was prompted me for one of the reasons why I invested in Marks and Spencer's, and they're having a bit of a turnaround now and are catering more for the masses and seem to be getting it a bit right, and that's reflected in their stock price. We click on the details. I don't know if I had any dividends from them. I bought 1 share, then I bought 14 shares, so I own 15. No dividend yield at the moment, so back to my portfolio. The FTSE 100. This is a ETF that tracks the FTSE 100 companies. I'm down 0.13. BP up 8%. AT&T, I was caught on this one. Everybody said they pay good dividends, but they don't seem to be doing very well on their price. I'm down more than 50%. WPP down 21%. Great Portland Estates down 50%. This is a property company. Pan African Resources, that's a mineral company, up 22%. Lloyds up 1%. Berkshire Hathaway, now I'm up 64%. I should have bought my stock or paid more when I bought this stock, invested more, because I'd have made a 64% uplift. This is Warren Buffett. Everyone knows Warren Buffett. This is his company that he runs, and you bought shares in this, and as you can see, the benefit of his ability has been reflected in the way the value of the stock has risen. But having said that, I've got such a small holding. It is a big increase of 64%, but monetary wise it's not. Granger, this company rents out houses to the public in the UK and Germany. They're down 10%. Vodafone, mobile phone company, down 48%. 888 up 12%. It's a gambling company. Global Clean Energy is an exchange traded fund that tracks companies that produce clean energy, down 22%, but that could be a moral type of investment. Virgin Galactic, I watched a video some time ago of Richard Branson going on into space, or the edge of space, and that prompted me to make an investment in Virgin Galactic. A silly mistake really, because they're down 92%. US value, iShares, it's an ETF that invests in, or which tracks the performance of US value stocks. I'm up 0.15%. Rightmove, UK based portal for where people buy and sell houses, down 16%. Warner Brothers Discovery, stand at the price I paid for them. Barratt Homes, they've had a bit of a movement up and down. House building has slowed down massively in the UK, and it's reflected in the price of the stock. Renewable infrastructure, the name speaks for itself, down 21%. Walgreen Boots, Boots the Chemist, well, that's what they trade under in the UK. It's a US based pharmaceutical type company. Boots is a retailer and pharmacist in the UK. There's a Boots in virtually every town or city. They'll be down 54%. I don't know if they pay a dividend or not. We'll quickly have a look. Here we go. Walgreen Boots dividend. Yes, we've had 3 dividends. So they do pay the dividends, but it's not very significant because my holding is so minimal. On the Beach, this is a travel company, and this was a free stock given to me when I invested in Freetrade, or set up a Freetrade app. That was in their early days when they were trying to get people using their app. Didn't cost me anything, but they're down 65%. Gold Resources, a gold company again. Sound Energy, and that is it. So this is my Freetrade app. It's becoming less attractive to use because I don't want to pay to use it, because I have other investments where I pay to have get access to use the platform. So I'm still going to keep my Freetrade. I know there are some stocks I'm holding that I can't add to them, but I can sell. I'll just manage it that way, and if I do have some money, I will. And there is a stock that takes my interest, and it is available on the free Freetrade part of the app. I still may use that to purchase. But as I say, I also have a trading 212 account where no charges are made, and I can use many more facilities at no cost. But I still like to keep in with Freetrade to see how they go, but we'll take it from there. So I hope you found this interesting. Quite a long video, a bit of a ramble, but I think you learn by doing, and it's good for me to do videos like this that make me appreciate what my holdings are and how they're performed, and it sort of focuses my mind to sort of go through each one and have a review of my portfolio. So I hope you've picked something up from this. Till next time, I really do bid you a really happy and successful investing adventure. Thank you very much.